Do you want to know the top 20 small business tax credit you can claim? Then you want to stick around till the end of today's conversation. Welcome back, folks, to another edition of The Awesome Sweetie Q. Wish you how you doing today. I hope you are doing fantastic. I'm doing marvelous if you're to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. Today I want to talk to you about the top 20 small business tax credit you can claim. If you want to save money on your business taxes, you first need to know which tax credits are available to you. So our team includes the CPAs, EAs, and other tax experts who have a lot of experience helping entrepreneurs, business owners, and regular people find the tax credit that actually apply to them. So listen to this show right now to quickly and accurately identify the small business tax credits that will help you keep more money in your pocket this tax season. But before I get into the nitty-gritty here, folks, what are tax? Let's first understand tax credits versus tax deductions. So tax credits are given to businesses and individuals as incentives for certain kinds of activities. For example, business can get tax credits for purchasing energy efficient vehicles and building with green products. Usually a tax credit is offered for a specific time period ending after that time has ended. In the instances I'm going to talk to you today about, these actions could benefit the economy, the environment, business development, or other positive business purposes. Tax credits are superior in terms of tax savings to deductions because tax credits are deducted from income before gross tax income is determined. Tax deductions, though, are taken in the next step of the tax process, reducing the net taxable income. So if you think about, tax credits will reduce your tax liability, whereas tax deductions will reduce your taxable income, your adjusted gross income. The thing here is that when it comes to taxes, you cannot leave everything to your accountant. Even if you have no knowledge of accounting, you still have to think about your own. You have to keep the paperwork ready so you can track the credits that are available to you. And that's what we're going to do. We're going to help you in today's show identify those. So you have tax credits for purchases. So for tax credits for business purchases, you must have purchased and put into service the equipment, vehicle, or facility in the year when you claim the tax credit. That's number one. Number two, we have two new coronavirus tax credits. So you have an employee retention credit to give businesses an incentive to keep employees working, and you have tax credit to help employers pay for sick leave and family leave for employees affected by COVID-19. So you can take this tax credit quickly by deferring payments of your employer part of Social Security taxes withheld from employees on Form 940. We have the Form 940 on the screen right now, and you do this. This 940 is the quarterly payroll tax report. The third credit, employee retention tax credit. So as part of the 2020 CARES Act, the IRS has created an employee retention tax credit to incentivize employers to keep paying employees. So your business can get a fully refundable tax credit with up to 50% of qualified employee wages, up to $10,000 you pay employees after March 12, 2020 and before January 1st, 2021. Number four, you have tax credits for paying employees on sick leave and family leave. So this is the 2020 Family First Coronavirus Response helps employers provide sick leave and family leave to employees. So you have paid sick time and you have paid family leave. So those are two great credits you want to grab when you file your taxes. Very important. So for the paid sick time, small and mid-sized employers, those with fewer than 500 employees, must give up to 80 hours of paid sick time to employees for COVID-19 related issues, for staying home for their own illness, or someone who needs care. For paid family leave, employers must give employees paid family leave to care for a child who needs care. So this requirement is part of the Family and Medical Leave Act, which requires larger employers to give unpaid leave to employees. And we also have number 6, we have a small business health care tax credit. So the Affordable Care Act, aka Obamacare, includes a small employer health insurance tax credit to encourage small employers to offer health insurance for the first time or maintain coverage they already have. So this credit is available to small businesses that pay at least half the cost of single coverage for their employees. So if your business and your plan meet the qualification, you can get a credit of up to 50% of the health insurance premiums you paid for employees, but not for yourself as the business owner. Right now, there are some conditions though, folks. So to be eligible for the credit, your business must have fewer than 25 full-time equivalent employees. You must have average wages must be less than $54,200 for the tax year, and you have to pay for this premiums using an IRS qualified arrangement. Now, if you are self-employed, you can get a similar tax deduction for yourself, your spouse, and your dependents. So the self-employed health insurance deduction is available for the cost of medical insurance, dental insurance, and long-term care policies. You can actually deduct this cost up to the total of your self-employment income. Let's now talk about research and development tax credit. This is an important tax credit out there. So research and development tax credits have been available for many years. But the thing is that many small businesses often don't realize they can qualify for those credits. People think you gotta sit in the lab, you gotta search for the next vaccination, the next COVID-19 vaccine to be able to write off the R&D tax breaks. No, the research and development tax credit is specifically for increasing research activities, and you don't have to be a large company to get the credit. A sole proprietor, partnership, or non-public corporation is eligible. So even if your business doesn't do traditional scientific research, you may be eligible for this tax credit for other kinds of research. The definition is relatively broad, but it includes activities such as developing new or improved products, processes, or formulas, developing a prototype or a model development, developing or applying for patents, certification testing, developing new technology, environmental testing, developing or improving software technologies, building or improving manufacturing facilities, streamlining internal processes, fostering product development, initiating surveys or studies, improving product quality, reliability, or function, improving business performance, and paying outside researchers or employees to do the research. So qualified research activities must be able to show a connection, really, and this is what the IRS cares about, a connection between the expenses claimed and the research activity. And the credit is for up to 20% of qualified research expenses, up to $250,000 annually. Right, so I'm showing you here on the screen right now, you have form 6765 and form 8974. Those are two forms that you need to be aware of if you plan to apply for the R&D tax credit. And the credit is open to individuals, partnerships, and corporations, and can cover up to 20% of expenses. However, only some types of research qualify, and sorting out if yours does can be very challenging. So you have to go back, as I said earlier, you have to read more instructions, the IRS instructions on Form 6765 and also on Form 8974. Number 7, here folks, we're still talking about the top 20 small business tax credit you can claim this year. Number 7, access for disabled persons tax credit. So if you make changes to your business location to accommodate employees and customers with disabilities, you may be eligible for disabled access tax credits. This is fantastic. And to qualify for this credit, your business must earn $1 million or less and have no more than 30 full-time employees the previous year. Your business may also be able to take a tax deduction for removing architectural and transportation barriers for employees and others. you can get this deduction in addition to the tax credit that I've just spoken about. So you need to file form 8826. We're actually showing this right now on the screen so you can see that. And the form is called Disabled Access Credit. Number 8, business tax credits and deductions for going green. So making changes to your business with equipment to make it far more energy efficient or more environmentally friendly can actually benefit you through tax credits. Because check this out, in addition to the tax credits, you may be also eligible for tax deductions for changes made to your business facilities. For example, the Business Energy Tax Investment Credit gives businesses credit for purchasing or implementing energy-saving activities like fuel cells, wind, and solar energy. To qualify, your business must own or have built the equipment, and it must meet specific quality and performance standards. Number 9, we have the Tax Cut and Jobs Act. Now, small business owners who are filing the 2020 taxes were able to take advantage of a new legislation that provided a 20% tax break. So one of the features of the Tax Cut and Jobs Act, the TCJA, is something called a qualified business income deduction. So it allows owners of pass-through entities, here I'm talking about sole proprietorships, S corporations, and partnerships, to deduct up to 20% of their qualified business income. Right? This is very important, and you gotta be under one. If you are under 157, if you have earned 157,500 as single and 315,000 as married, then you qualify for this credit. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We are also continuing our conversation about the top 20 small business tax credit you can claim right now. Number 10, tax credit for new all-electric and plug-in hybrid vehicles. So if you buy a new all-electric car or a plug-in hybrid vehicle, you may be eligible for a federal income tax credit of up to $7,500. The thing here is that the amount of the credit varies depending on the battery and the battery used to power the vehicle. And you cannot use the credit for a used vehicle for your business. It has to be new. So the credit is for vehicles bought after December 31st, 2009, and it starts phasing out when at least 200,000 qualifying vehicles have been sold. And actually, if you want to claim the credit, you have to use IRS Form 8936, and we're actually showing you this on the screen right now. And the form is called Qualified Plug-in Electric Vehicle Motor Vehicle Credit. Number 11, the Work Opportunity Tax Credit. So this allows employers to get a business tax credit for hiring new employees in certain categories. Things like people who are veterans, who are TANF recipients. So TANF stands for Temporary Assistance for Needy Families. For SNAP, Food Stamp recipients, designated community residents, those who are living in empowerment zones or rural renewal counties. Empowerment zones are defined areas. So you have also vocational rehabilitation referral. If you hire ex-felons, you might get credit. Supplemental security income recipients. Summer youth employee, those who are living in empowerment zones, and this credit is taken against the employer's share of the employee's Social Security tax. Number 12, earned income tax. So this you would qualify if this is a tax that provides a tax break. This is a credit rather that provides a tax break to people who are employed but still earn low to moderate income. So even if you have a small business but you're still struggling financially, you might qualify for this. And how much is this credit worth? The amount will vary widely depending upon the factors that govern your life, the factors that are specific to your situation. So as a general guideline, the credit can range from $500 for those without children to over $6,000 for parents with 3 or more kids. And to claim the earned income tax credit, you will file this credit on your Form 1040. And if you have children, you will submit a Schedule EIC as well. Number 13, we have a credit for employer-provided child care facilities and services. Now, if you are an employer and you provide child care facilities for your employees, either on-site or through a contract or a referral program with an outside health child care facility, then you can qualify for this child care tax credit. And really, it's the credit is for 25% of the amount paid for child care expenditures. I'm talking things like constructing and maintaining the property, as well as 10% for the amount paid to provide child care resources or referral services to employees. And the total limits for this credit is $150,000 per year. And if you want to claim this credit, you have to file Form 8882. And you need several limitations and qualifications before you can file for this credit. We have the child and dependent care credit. So this is a credit that you will file on your individual taxes, but it's one you definitely don't want to forget, especially if you're a solopreneur, you're a sole proprietor, or you are one-member ALC. You are one member ALC. If you own a one-member ALC, then you will be interested in this credit also. So this credit is worth 20 to 35% of your child care expenses, up to $3,000 per child, with a maximum credit of $6,000 per family. And to claim this, you need to file Form 2441. Number 15, you have the Small Employer Pension Plan Startup Cost Credit. And this is a small business tax credit designed to offset the cost of, guess what? Starting a pension, right? So the credit is limited to $500 or 50% of your startup cost. And the great thing we love about this is that you can claim it for the first 3 years of your plan. And to be eligible, though, your business must have fewer than 100 employees who receive at least $5,000 in compensation. And your business must not have an existing 401k or other qualifying retirement plan for the past 3 years. And to claim this credit, you need to use Form 8881. Number 16, we have the New Markets Credit. So this is a credit that supports businesses that invest in community development enterprises and community development financial institutions. And those two categories, the CDEs and the CDFIs, those are organizations that help low-income communities. So most eligible projects involve acquiring, renovating, or building real estate in low-income areas, such as educational facilities or community centers, hospitals or healthcare facilities, industrial buildings that create jobs, and facilities that serve women, minorities, or other underserved communities. The great thing here is that your project must be located within an area that has a 20% poverty rate, or with median family incomes that do not exceed 80% of the area median income. Number 17, you have the Empowerment Zone and Renewal Community Employment Credit. And this is a credit this is a tax credit rather for businesses that hire someone who lives and works in a low-income area. So the U.S. Department of Housing and Urban Development created Empowerment Zone to stimulate development in low-income areas. And qualifying businesses can receive up to $3,000 for each full or part-time employee who lives in an empowerment zone. And this comprises up to 20% of the first $15,000 in wages. Next, you have the Premium Tax Credit. And this is another individual credit that you do not want to overlook, especially if you are a solopreneur, you are a sole proprietorship, or you are one member LLC. You qualify for this credit if you purchased your own health insurance through the health insurance marketplace. And if you need to claim this credit, you need to file Form 8962. Number 19, you have the Retirement Plan Startup Cost Tax Credit. And if you are a small business owner starting a retirement plan for your employees, then the IRS will reimburse you some of what they call ordinary and necessary cost of that startup. So if you have 100 or fewer employees, guess what? You can qualify for this credit by meeting a few specific criteria. The thing here is that you can claim the credit for the first 3 years in which you are beginning a retirement plan for your company. And the credit is worth 50% of your startup cost, up to $500 per year. And you need to file Form 8881 to qualify for this tax credit. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We're also having a conversation about the top 20 small business tax credits that you can claim. And last but not the least, we have a general business tax credit. Now, this catch-all tax credit comprises a variety of individual tax credits designed to motivate business owners to undertake specific activities, such as purchasing qualified electric vehicles, getting into new markets, and retaining employees. Some of those tax credits are covered in this show, and I'm going to go through them with you right now. So you have investments. So that's on Form 3468. Reserved. Increase in research activities, Form 6765. Low income housing, Form 8586. Disabled access, Form 8826. Renewable electricity, refined coal and Indian coal production, Form 8835, Indian employment, Form 8845, orphan drug, Form 8820, new markets, Form 8874, small employer pension plan startup cost and auto enrollment, Form 881, employer provided childcare facilities and services, Form 8882, biodiesel and renewable diesel fuels, Form 8864, low sulfur diesel fuel production, Form 8896, distilled spirits, 8906, non-conventional source fuel, carry forward only. So first, I'm just giving you a list of all the activities that will qualify you to get a tax credit if you were engaged in any of them in the previous year. So we also have if you have energy efficient home, especially if you use the home for your business. We have alternative motor vehicle, Form 8910, alternative fuel vehicle refueling property, 8911, enhanced oil recovery credit, mine rescue team training, that's Form 8923, and we have agricultural chemical security. We have employer differential wage payments, Form 8932, carbon oxide sequestration, Form 8933, qualified plug-in vehicle, electric vehicle, motor vehicle, electric drive. So qualified plugged-in electric drive motor vehicle. You got to use Form 8936. Qualified plugged-in electric vehicle. You have employee retention. This is Form 5884. So you also have general credits from an elected large partnership. You also have oil and gas production from marginal wells and certain other credits. So for more information, you might want to download Form 3800. This is the general business credit form, and where you have the long list, you have the whole gamut of the tax credit that your small business might qualify for. All right, folks. So basically, we have covered the top 20 small business tax credit that you can claim. One thing I want to say here is that you should know that claiming a tax credit is not a one and done activity, right? It is something you need to review carefully every year at tax time, because your eligibility for certain tax credits will change. This is very important. For example, you can claim a tax credit for a business purchase or activity only for the year that you started using the product. For example, an electric vehicle, or doing the activity. That is research and development, not every year into perpetuity. Conversely, as your business evolves, you may be able to claim tax credits that weren't available to you previously. So small business tax credits can be hard to parse and challenging to keep track of, but they are worth every minute of your time or the expense of a qualified tax professional to review the ones for which your business is eligible, or even buying tax software to to make sure that you are actually claiming all the tax breaks that you deserve. And one way to make things easier at tax time is to have all of your accounting numbers in order. So this is very important, and you can actually do it manually, or even better, you can go through an automated service, because many cloud accounting solutions categorize and present small business financial information into tax-ready accounting reports. So make sure before and finally here is that you need to be aware of the fact that there are restrictions and qualifications that you must meet before applying for a tax credit. So do not apply for a tax credit until you have spent money on the purchase or the activity. So make sure that you are really compliant with the rules there. Okay, here's a recap of today's conversation. I gave you 20 small business tax credits for this tax season. So we have tax credits for purchases. We have the 2 new coronavirus tax credits. We have the employee retention tax credits for paying employees on sick leave and family leave. We have small business healthcare tax credits. We have research and development tax credits. We have access for disabled persons tax credits. We have business tax credits and deductions for going green. We have the Tax Cuts and Jobs Act, tax credits for new all-electric and plug-in hybrid vehicles. We have work opportunity tax credits. We have the earned income tax credits. We have the credit for employer-provided child care facilities and services. We have the child and dependent care credit. We have the small employer pension plan startup cost credits. We have the new markets credits. We have the empowerment zone and renewal community employment credit. We have the premium tax credits. We have the retirement plan startup cost tax credit. And last but not the least, we have the general business tax credit. Thank you, folks, for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.